Today, everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 7th of October, 2023, and it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of October. And finally back after a 3-week break and basically a month. So let's see whether there's any significant change in the market since I left off at the first week of September, and the dollar has been continuing to strengthen, so at the expense of all the other majors have been just weakening until last week, or until actually just since the middle of last week, where it's finally trying to recover, make a significant recovery after the past month. So the theme hasn't changed since the breakdown. And let's review what happened over the last 3 to 4 weeks and have a quick outlook for this coming week. So since the beginning of September, the second week, the ECB did raise interest rate and by quarter percent, 25 basis points, but it was a dovish hike with likely pause after this. And no surprise with the Federal Reserve, they continued to hold, but still with a caveat that they may continue to raise interest rates later on, depending on the data. However, the Bank of England did surprise and held their interest rate. They did not increase, and after 14 hikes, and seen to be a dovish pause here. And as usual, the Bank of Japan, still no change, no action from the central bank, and very dovish, which caused the Japanese yen to weaken further, but we'll see in the another video with spot gold and dollar yen. And then the core PCE price index did come in slightly lower than expected, so inflation figure was slightly lower. And then for last week, the RBA still held their interest rate at 4.1% for the fourth month, and also seen as dovish. And on non-farm payroll yesterday, the jobs was very strong. Jobs added was strong. So the jobs outlook for the economy is still very strong, which could be a concern for the market, as the Fed may use that as ammunition to raise interest rate for another round before the end of the year, and could extend their possible rate cut out another year. So almost double the forecast here. So this coming week, there's PPI and CPI data for the US, and the forecast, a lower forecast compared to the actual higher figure for the previous month. And the UK GDP figures also coming in, and then some minor news on the consumer sentiment. So this coming week, we'll likely see some continuation move. It could be some recovery for the majors as the US dollar pulls back and possibly consolidates. right? So let's move back to the analysis. So let's begin with the euro. Where after falling from the swing low at the just below the 108 and falling all the way down to hit the 200 pip extension just below 105 at 104.67 and bouncing back up from the Wednesday, and after initial dip with a strong US non-farm payroll report, it managed to bounce back and recover from the 105 back up to 106. So major support at the 200 pip here, which we've already left this pip for over a month now. Let's leave out the interim support. Interim resistance is going to be at the 138 pip extension here. And major resistance at the swing low if it does climb and manage to find its way back up. But before that, it's got to get up to 106.50 area and then possibly 107. And this week there isn't any major news from the Eurozone, so it's exposed to the US dollar news, especially the CPI. Let's take a look at the weekly time frame, where yes, it's been for the last 4 weeks has been dipping lower, and finally a strong bounce from the 200 pip extension, and we'll see if this is going to be a strong recovery from here. If it does climb back up to the 100 pip, the swing low, that's where the weekly 55 EMA is as well. So it could consolidate first next week before it attempts to resume its recovery. So that could be an interim resistance and possible inverse head and shoulders here to attempt to recover back up to 107 and then perhaps back up to this swing low here. And if we take a look on the weekly time frame, you will see that the reason why it dipped to the 200 pip extension is also major support just above the 105 area. So this area of the market structure here did provide some buying demand. Okay, so let's compare this with the US dollar index, where possibly see some consolidation as well. And here's the DXY, the US dollar index, where it did continue to climb higher above the 105, which was a significant round figure resistance from previous, and almost hit the 107 level, climbing up over 200 points here before retracing and pulling back into the 162 pip extension. And this fib reversal swing has been there all along, and it did not reach the 200 fib like the euro, but yeah, it was just shy of the 107 round figure. So we'll see if this week there's going to be a continuation move, or perhaps also consolidation, and this possibly also could turn out to be a potential head and shoulders and a return back to 105, or perhaps the 138 fib extension. Let's take a look on the weekly time frame as well. And yes, after strong bullish move, it did form a kind of a shooting star for the week last week, and we'll see if that's going to cause a reversal or at least a significant retracement, and that's possibly going to pull it back down to the also the weekly 55 EMA at the 100 fib swing high, similar to the euro. So that's all the way back down here. But for now, let's mark the 104 round figure as a significant support. There's another intermediate support at the 138 fib. Major resistance at the 107. Okay, so we'll see whether it's CPI data will create any opportunity for further strength, or whether it's just going to peter off as the forecast is for a lower figure. So this could allow the US dollar to pause and take a breather, and let the majors to recover as well. Okay, let's move back to the other pairs. Moving on to the cable. And as with the euro, it also fell hard from the 125 round figure, and fell from the daily 200 EMA all the way down below the 121 round figure, and the which coincides with the 200 fib extension, but did not hit the 120 round figure. There is major support now at the 120. And an interim resistance at the 123, which is at the 162 fib extension area. And major resistance is going to be at this just above the 138 fib extension, along with the daily 55 and 200 EMA that's converging together just below the 125 round figure. Let's take a look on the weekly time frame. And also forming a hammer-like candle. On the weekly time frame, we'll see whether this is going to be a strong signal for a bullish recovery. Previous week was also similar type of formation, but this dip below the key support could signal a significant recovery from now. And as with the euro, it's got to contend with this area of resistance now, so there could be some intermediate resistance, and there also could be an inverse head and shoulders forming. Right, but Thursday we'll see whether these data will help to boost the cable and the sterling pairs recovery. Okay, let's move on to the Aussie dollar. And similar to the other majors, however, it did not dip too far below because it had already fallen significantly, and now has found support at the 63 pound figure, which has been strong support for a while now. Managed to bounce back up to 64. So similar market structure with a possible pullback into some interim support to give it a boost with an inverse head and shoulders structure. But if this does not hold, then that's going to be a continuation of a bearish move. So key resistance is going to be at 65, just above the 138 fib extension with all these selling area, and support going to be at the 63. Now let's see whether this area will hold. Weekly time frame. It's not a convincing candlestick like the euro or the cable, but we'll see if there's any follow through with further retracement from the US dollar. So it needs some help from the US dollar here to recover somewhat. Okay. So let's see what the US dollar price action is going to be like next week with these key indicators from the market, and we'll see whether there's any possible recovery from all the major pairs after significant weakness over the last few weeks. All right, so do check out my other video with on spot gold and dollar yen. See whether that's a similar story as well. And have a safe week and a good trading week, and cheers for now.